So chapter 12 is going to look at payroll. Okay, what is payroll? Well, of course, another aspect of the business is having people who work for you. Okay, and these is another obligation or another expense to the company that we have to assume because we can't have people work at our company for free. You can through an internship, but the hopes of this is that you're going to be giving experience. Now, in this case, when we look at payroll, we are looking at having employees who work for the business, okay? And we're going to be dealing with compensations, we're going to be dealing with taxes, any benefits and deductions that are involved with having employees. Okay? So first off, before we can even begin, we must have a taxpayer identification number, okay? What is this used for? Well, this is primarily used for, especially when we have a taxpayer identification number, is that it is meant to keep taxes, right? Just like what our social security number is used for, right? It's for tax purposes to keep track of who we are and how much money that we've either contributed to federal or state, right? Now, in this case, when we have an employer's identification number, it is very important that we identify the company as a company, right? Now, so that's what an employer identification number does, is it identifies that this is the company and this is the number that we use to keep track of the tax. Okay? Now, let's not confuse that with a social security number. Now, as a sole proprietor, yes, sure, you could actually use your social security number, right? However, if you remember that rule that you must keep your business and your personal separate, so the best bet is, yes, you can use your social security number. You just have to make sure that when you file taxes, it's separately from your personal taxes, okay? Now, a social security number is distributed by the Social Security Administration, which the number is pretty straightforward, right? It goes 3 digits, 2 digits, and then it goes the last 4. So in this case, it is still a combination of 9 digits, okay? And this is what we use to identify each other. Now, a business identification number is distributed by the IRS, okay? So that's what's different there is one is from the Social Security Administration. This one is from the IRS itself. And this one has the same 9 digits, except the way that it's arranged is differently. So it goes 2 digits, then the rest of the 7 digits. So in this case, that's how you can tell the difference between a social security number and a employer identification number, is the way the numbers are arranged, okay? So again, this is used for tax purposes, but it's also a way to identify that the business exists, and this is its ID number. Okay. Now, how do I get an employer identification number? Well, simple. You go to irs.gov and you fill out an SS4 form. Now, in this case, especially when you apply for your business license, you also go ahead, you also at the same time apply for the employer identification number as well. Some cases, depending on which platform you apply your business license to, that may not be the case. But yes, you will get this form from irs.gov and you need to fill out all the information about the company before anything else, because the taxpayer identification number, again, it's very important because it identifies the business, but it's also a means to collect tax. So in this case, you need to put in your information about your company, and so on and so forth. And usually this doesn't take that long, but it's definitely necessary if you have the means of, planning to have employees, or if you are in the alcohol or tobacco business, you definitely need this because alcohol and tobacco, they have special taxes, and anything else that has special taxes. So especially like a grocery store that has tax exemptions because of they sell food products. So anything that has special taxes, you definitely want to make sure that you get an employee identification number. Okay, so you submit this to the IRS. I believe you can submit it digitally, okay, or you can go to any bureau and be able to submit to the IRS. Okay, so let's talk about the different types of employees. Okay, here are 6 different types of employees that you can normally see currently right now. Now, if you go to irs.gov/publication 15, there's going to be way more than beyond this list. So there's a bunch of different types of employees. But like I've mentioned before, right, these 6 are going to be the most common ones that you normally see out there, right? Anybody that's a specialized employee, you would need to refer to the irs.gov to get more details for that. So again, if for example, a specialized one would be if your family member, your spouse, is an employee and they work for your company. That's a special employee. Yes, they get different. They get treated different as well when it's written on paper. Okay. Now, again, the first 2 types of employees are actual employees. Okay. These people are going to be on the payroll, on the actual payroll, right? The other 4 are going to be mere expenses to the company, all right? They're not going to belong on the payroll, but however, these are different types of employees that you do commonly see anywhere in the world, right? Or anywhere in the United States, okay? So let's go ahead and go through all 6 of them. But we want to, for this chapter, we are primarily focusing on our common law and our statutory employees, okay? So let's go ahead and talk about the first one. Common law, or also known as your regular workers. Common law employees. What can they do? Okay? In order for you to determine what a common law employee does, is that a common law employee is a regular worker, and that means the boss has full control over what this employee does. Okay? So that means the tasks that they do, the job that there is inquired, the when they have to come in is also a requirement. So again, so these guys, right, they're usually your regular workers that come into the office from 8 to 5 from Monday through Friday, right? You have full control as a boss to have full control over this employee. You tell them how to do the job. You tell them what to do, and you supply them with the items they need in order to get the task done, and you tell them when to come in. So again, right? You tell for example, you have someone that's admin, right? You tell them you better come into the office every single day from Monday through Friday, 8 a.m., and you clock out at 5 p.m. Your lunch is from 12 to 1, right? And your job is to, email. Your job is to do this. Your job is to do that, right? And I provide you an office with a computer and everything that you need, right? That is giving an employee basically no room to do whatever they want to do, because at the end of the day, you're paying them to do the job how you want it to be done. So this is a common law employee. They're just your regular 9 to 5 kind of individual, if that's the example, right, to use. Okay? So again, the boss will have full control of how this employee does their job. Okay? What about a statutory employee? A statutory employee is more or less very similar to a common law, But the only difference here is when they do the job, okay? Or how long they do the job. So a great example would be a delivery truck driver, right? A full-time life insurance representative, right? Somebody who's a worker, and what they do is, yes, they're given the task, they're given the equipment to be able to get the task done. They were told when to do it. However, the end result is going to vary, okay? You might not need a truck driver every single day, okay? And this person, right, you can't tell them when they can start and when they can finish because, again, a truck driver, right, depending on where they're traveling to, how far and how long the distance is, right, you can't determine when their end of the shift is, but you can tell them, hey, start at this hour. Come into the office by these deliveries need to be made at a specific time. That is all that the boss can do. They can tell them what to do, they can tell them when to do it, they can tell them how to do it, and they can provide the materials to do it. But ultimately, they cannot tell you what the end result is because, especially for a truck driver, right? Their task is to drive from point A to point B. You can't determine when they'll finish the job. Okay, so that's the huge difference there. And again, these kind of employees, right, they're statutory for a reason because they are not the kind that has to come in at a frequent time and every single day, right? You're not telling this person to come into the office from Monday through Friday, 8 a.m. to 5 p.m. So that's the huge difference there is you're not telling them when to come in, but you are telling them when to come in for the specific things that you need them for, okay? And we call these statutory employees.
Real estate as well?
No, real estate's going to be completely something different. Okay. So again, these people actually work for your company. However, the time that they invest in the company is going to vary. That's the difference here. Okay. So here you go. Now, why is it so important to know these two employees? Okay. These two employees is meaning when they work for your company, as a company, they are responsible to pay into the welfare of these individuals, right? They must pay for the federal income tax withholdings, and they must pay into FICA, which is Social Security, and Medicare, right? The Federal Insurance Contribution Act. Okay, it is a requirement by law that if you have employees, right, the employer must be responsible to pay into these obligations because it is a part of what the agreement is for, U.S. citizens, right? That's what is required federally and statewide as well. Well, mostly it's federal. But for statutory employees, right, so your common law, so if they work for you from 8 to 5, right, it is by law because due to the Protection Act for the workforce, right, you must comply with these rules and pay into, their because they're contributing to society, so you must pay into that as well. Now, as for statutory employees, here's something that's the same but it's also different. You are not required to have them pay into the federal income tax withholdings. However, you are required to pay into their FICA. So that means just because they're not going to be here every single day, you still have to pay into their Social Security and Medicare because that's your protection to having employees. Okay, but this one is for the statutory employees, they're not obligated to have to pay into their income tax withholdings. That's the huge difference here. Okay, so two types of employees that will be listed on the payroll is your common law and your statutory. Okay, common law, you got to pay everything for them, and they also have to contribute their portion of their paycheck as well. Okay, so that's that there. Any questions here? Good. All right, so let's talk about the other different types of employees, right? We're going to talk about statutory non-employees. Okay, and we're going to talk about your independent contractors. So statutory non-employees, this is where your real estate agents are going to come from, okay? Now, what determines a statutory non-employee, okay? In this case, they are non-employees because at the end of the day, right, when they go in, they have a place to work, they have a task that they can do. However, the difference is that, okay, for a real estate agent, right, if they're in the office, they can come in whenever they please, right? If they can come in when they have a client, they're not told when to come in the office. So there's the huge difference here. They can come in as they please. Whenever they work that day, if they have a call and say, hey, I want to have a looking at this house, here's a huge thing. If that person sells that house to them, they get benefits out of it, right? They get money on top of money. So that's why it's a real estate agent would be a perfect statutory non-employee. However, they work together as a company, yes, right? But agents, right, they act as if they're their own individual person who's trying to make the sale. However, they're working together as a company, right? When you work for a real estate agent, you're working for the company, not for yourself. However, you are, as a separate sales representative, you are doing whatever it is the task is given. However, you guys come in whenever you feel like it, and you guys, when you take a sale, you get extra money on top of that. So that's a huge key factor of what a statutory non-employee does. Okay, so again, you have real estate agents, you have direct salesmen, you have agricultural workers, okay? And these kind of individuals must fill out a 1099 form claiming as non-employees. Okay, so the 1099 form you can claim as self-employed, independent contractor, or you can also apply as a non-employee. So again, that form is not just only strictly used for independent contractors, it's also for self-employment as well, right? Again, these kind of individuals, because they're not going to be paid by, they're not going to be on the payroll list itself, they are responsible to pay for their own income taxes as well as their benefits for the IRS. Okay? So that's statutory non-employee. So what's the difference between a statutory non-employee and an independent contractor? Independent contractor, right, they're very similar. They come in whenever they want to. If they have a client, they can take care of that client. However, here's the difference. They get to determine what the end result is. So a great example would be a doctor's office, right? Yes, they work for a whole entire doctor office. Yes, they all do the same thing. But every doctor is going to give you a different diagnosis, okay? Where real estate, your end goal is you're trying to sell a home. They all have a common task, right? But in this case, as a doctor's office, everybody has a common goal, right? But there's a different diagnosis. So the end result is what's going to differ compared to a statutory non-employee, okay? The end goal for a statutory non-employee is you have the same end result. For independent contractors, you have different results. So think of any, for example, right? So we talk about doctors, right? You go to a doctor's office, they'll probably have 5 or 6, 7 doctors, but they all give you different diagnoses. So in this case, they can come in whenever they want to, right? They are not obligated to come in at a specific time. Okay, they are based on appointment basis, right? So they come in because they have an appointment, right? They also, again, they give different diagnoses, so they determine what the end result is. Now, some independent contractors, right, depending on the facility, they can choose to supply their own means, so that, for example, if it's a doctor, they can have their own stethoscope, right? They don't need to use whatever that the company provides, okay? And so on and so forth, right? However, if the company chooses, they can provide general things like the office, the sanitation stations, the cotton swabs, right? All of those are general things. However, the independent contractor can go in there, do their own diagnosis, and have a different end results than everybody else that works in there. Now, again, what independent contractors do is they must fill a 1099 form applying that they are an independent contractor, and they also are responsible to pay into their own income tax withholding. So that means no income or federal taxes are withheld from the company. Okay, these individuals have to pay taxes separately on their own because they are self-employed. They work for themselves, or they have they must be responsible to pay for their taxes as well. Okay. Any questions here?
I am okay.
No.
Okay. And then the last two that we are going to talk about is going to be leased workers and or temporary agency workers. Okay. Now, oftentimes there are headhunters or agencies that find people work, or vice versa, where companies go to these headhunters or these specifically work agencies to tell, hey, I'm looking for somebody to work for this job. Usually it's a temporary job, okay? And what they do is they scour around to look for somebody to do a temporary job. And we call these temporary work agencies, or, they're commonly known as headhunters. So, again, since we're in the accounting department, Robert Half is going to be an accounting headhunter firm, okay? It's going to be one of those, temporary work agencies that temporarily find you some jobs here and there in the accounting field. And what they do is they try to get you into the system, so then the hope is that eventually a company is going to buy your contract out, so then you can be a full-time employee into their company, right? That is one of the options that you can have as a temporary work agency. But for a lot of temporary work agencies, they say, hey, no, you're going to be contracted to work for the agency, and you cannot leave this company and go or leave this agency and work for a different company. Okay, so that's the thing about this, is you are contracted with these headhunters to basically do any temporary job as you are assigned to do. So in this case, these type of employees, right, they are only usually there to work for temporary jobs. Okay, so that is what a temporary work agency does, is that you're contracted to somebody to do temporary odd jobs here and there. It's not a permanent position. So in this case, you don't get paid by the company itself. You get paid by the agency. Okay, so that's the huge thing here. And again, as this one, because you're contracted by the agency, and you're going to say, when that happens, right, the company is going to determine what your job is and so on and so forth. Okay. So when we have the temporary work agencies, what happens when you a leased employee is a possibility? So again, some temporary work agencies allow for leased employees to arise as well. What is a leased employee? So under the temporary work agencies, if you sign a contract with that agency, right, they can determine that if a company wants to buy out the contract, then we call those leased employees, because you contract them to work at that company for X amount of time, and if that company likes you, they can buy out the contract and have you as a full-time employee. Those are leased employees. Okay, the huge difference is that you're still bounded by a contract. You're not paid by the company, you're paid by the agency until they buy them out of the contract. So that's the huge difference here. Now, a leased employee, right, can be like, it's very similar to a temporary, but you could say, hey, find somebody who can work for me for a whole year for a contract, and if I like them, then I'll keep them. If not, you can throw them back into your temporary agency pool. Okay, that's the deal here. Okay, and the huge difference is they must all fill out the 1099 form. Okay, and they all are responsible to pay into their own federal income taxes and benefits that they want to do. So there's no benefits here, no Social Security, no Medicare, because they are solemnly responsible to pay into their own retirement plan and so on and so forth. Okay. All right. Any questions here? No. So now that we've gone through all of that, we're going to talk about the payroll process. Now, if you mention those four that we mentioned, right? The statutory non-employees, independent contractors, your leased employees, and your temporary work agencies, all of those are never going to be on a payroll, right? They are simply mere expenses to a company. You are not the company's not responsible to pay any dime into their Social Security, Medicare, or their federal income tax, or have them pay their federal income tax. Okay, they take the whole amount of money as whatever they claim, and they're responsible to pay it into their own taxes. So my common law and my statutory employees, those individuals are going to be what the company is going to be solemnly responsible for, and that's where the payroll process begins, right? Here are the steps for having payroll. Okay, you need to, number one, you're gonna need to submit documentation to have proof that you are holding employees. So again, everything is legalized through documentations, right? Then step 2 is you need to collect W-4 forms from each employee, which determines how much federal income tax they must withhold. Okay, we'll talk about what a W-4 form is. Okay, then step 3 is you're going to determine what their pay rate is, whether they're hourly or salary, how much income can they earn, okay, and how to record the income. And then number 4, you're going to calculate all the taxes, and then number 5, you're going to pay the employees. Very straightforward. And then of course, we have 2 sections that we got to look for. We got to figure out what the employee is responsible for, because individuals that work for a company have to take out or withhold from their paycheck to pay into the federal, right? That's the whole purpose of working here in America, is that you're paying into your benefits, okay? You're paying into society, taxes. Now, as the employer side, once you determine the employee side, the employer must match what the federal Federal Insurance Contribution Act, so Social Security and Medicare, company must match them, okay? Because it's their responsibility to also pay into that as well. But they're also responsible for paying into unemployment. They must pay into federal unemployment, state unemployment, and another thing that they could do too is they must pay into their benefits, their deductions, as well as maybe things like workers' compensation, a protection plan for them in case the employee decides to sue them. Okay? So that is what you're going to be determining. So we're going to focus on just the employee side for today. Tomorrow we'll go over the employer side. Okay? So let's go ahead and start with step 1. Step 1 is you are going to have to submit a documentation. Okay? So when I say you, we're the company, okay? You're responsible to have to submit a documentation to the Department of Employment, okay? Every state is going to have a different Department of Employment. Here in the state of Nevada, in Las Vegas, right, we know that as DETR, right? The Department of Employment, Training, and Resources, okay? Or I think it's rehabilitation. So in this case, that's exactly what we have here is DETR, okay, in Southern Nevada, okay? That department has a special department in there. So, of course, because it's, employment training and rehabilitation, this is for the employment section, okay? This is where they have a division, where they have the department where every single company, since they're working for the state part specifically, right? Every business is based on the state that they're doing business in. So they must file with the state of the employment to file the form of a W-2 form. Now, before you get confused, a W-2 form, okay, is what the company, there's 2 of them, right? The company must submit the W-2 form to the Department of Employment, right? So then at the end of the year, right, when you file for your own personal taxes as an employee, you are obligated to get also a W-2 form from the employer, okay? So again, the W-2 form is this form where you have to fill out the information about each and every single employee. You must have their title of their job, their pay rate, what the task does, their social security. You have to do everything on that. Now, anything optional to that, such as, doing background checks or drug tests, those are extra things that you can do. This is a 100% obligation. You must report to the state that your company has this many employees. Okay? And this happens every time you have a new employee as well. Okay? You must file a W-2 form to let the state know that your company has employees, so then they can count how much money is supposed to be collected from them and so on and so forth, right? They keep a really good track record of what the individual, basically keeping track of the individual's taxes as well as the company's taxes, okay? So once you file them in here and you let the state know that you have X amount of employees, right? Then the second step is to collect W-4 forms for each employee, okay? So what is a W-4 form? A W-4 form basically tells an employer how much income tax to withhold from each and every employee. So again, every employee is going to have a different circumstance, right? They might need more money than now then they will, they might need the money now for the money that they earn and they work, right? They might need that money to support their family, support their dependents. They might need it to claim so they can pay for their house, So again, the W-4 form is an employee's responsibility to submit to the employer. Okay, so that means the employer is responsible to collect these documents. So then when they do calculate the federal taxes, they know how much to withhold. Okay, so again, the W-4 form from way back when has drastically changed to now. Okay, so back then in 2019 and prior, right, you would go through a list of items, and if you claim them, you put a 1 there. Okay, then you count at the end when you answer all the questions. You're gonna calculate all the ones that you have there to get a total number of withholdings. In this case, no, they scrapped that idea, and now this is the new form. You're going to start off with what kind of filing status that you are going to be having, right? Once you have that filing status, you're going to also determine whether you have extra income or not, okay? Depending on the filing status, right? Depending on the filing status, right? If you're single, then you get the highest tax bracket, right? If you are married and you're filing jointly together with somebody, you're going to have to report their earnings as well. So that's why this is so different, because back then when you were filing jointly, you didn't have to report their earnings. You only had to report that you're filing together, right? In this case, that's the difference here, is that if you are married and you are filing jointly, you must disclose what your spouse's earnings are. So what step 2 does is it's gathering the total amount of earnings that you earn together overall as for a household, right? If you're not a spouse, okay, or if you don't have a spouse that is earning extra income, what section 2 does is it also calculates any money that you have. So from a primary, secondary, and tertiary jobs, right? Because now in today's society, anybody can hold more than one job, right? And that's what makes it much more easier, is instead of sending every single employer a different W-4 form, they want to make it that much easier and just send out one, okay? Now, here's the difference, okay? Your primary job is obviously going to be your primary job, so you're not going to list anything here. But if you work for Uber or you work for Lyft, that's considered a secondary job, right? And that's extra income, so you must report that, saying, I have a second job. So that means you're going to report how much you earned for section 2, okay? Once you've done that, then section 3 says that, so if you want to claim a child or if you want to claim a dependent, right? So any children under the age of 17, they are $2,000 per child, okay? And here, I believe, same thing with the previous one, you can only claim up to 10 dependents, okay? Now, that's that section there. So if you have children that you want to claim, okay, normally a lot of people claim children for taxes at the end of the year instead of during the year. But in this case, if it's to the point where your job isn't paying you enough to cover your expenses, then that's why you need to claim your children during the year instead of doing it after the year. So in this case, right, so if you want to claim your children. Now, if you have a dependent, Okay, anybody over the age of 18 up to 26, or any elderly people, okay? Anybody that depends on you is going to be $500 per dependent. And I don't know how many dependents you can claim up for this one, but I don't think you can claim up that many, okay? So if you do want to claim your children, that's where you gotta calculate this right here as an annual amount. Then the last section here for section 4, you're going to be determining what those extra other income is. So other income coming from stocks, those are going to be considered other income because they're not from a job, but they're generated income from, if it's passive income, that needs to be reported here as well. Okay? And any other extra deductions. So this is where your house comes into play, right? If you want to claim your house, then you can go ahead and claim the house, okay? And so on and so forth. So this is the new W-4 form. This changed since 2020, okay? Just because 2020. So that's because, again, with the society of everybody having the capabilities of having multiple jobs, right? So that's why they changed it since then, okay? And this is before the pandemic, okay? Because again, taxes usually taxes usually are determined by November of the previous year. So this was established by November 2019, before the pandemic happened, all right? So that's the W-4 form there. Yes.
So, in what cases would a employee receive a W-4 instead of a W-2? Like, is it for like a self-contract or something?
Okay, so a W-4, okay, is what an employee will never receive a W-4 form. Okay? It's
Okay, so how would they file?
okay. So the W-4 form is to tell the employer, hey, I want to claim all of these withholdings. So that means when I get my paycheck, it better be taken out all of these taxes. That's what the W-4 form does. Now, how do you file taxes? Is that you should be receiving a W-2 form. Okay?
Okay, so what is the difference between a W-4 and a 1099?
So a W-4, right, is where you are working for the company and the company is going to take in responsibility for you as an employee, but also it is also a means of you having to also pay into those federal taxes because you're responsible for that. But here's the thing, you're not responsible to pay for it on your own. The company is to do it for you.
Okay.
So yeah, where a 1099, the company just gives you the straight amount and you are responsible to save that portion of the money to pay tax at the end of the year.
Okay, because I am actually, well, I just did like this freelance gig thing and they gave me a W-4, so I'm kind of like confused on how I would file for
Okay,
that.
so if they gave you a W-4 form, you need to fill that out and submit it to that employer because then you're telling that employer how many things I want to claim. Okay, so if you want to claim your children, if you want to claim your house, if you want to claim that you're married, right, and that you're flying together with your significant other, then that's the form. That's why they gave you the W-4 form for you to fill out. Now, oftentimes, this is recommended. You definitely don't want to claim anything because if you claim a lot of money on your W-4 form there is a higher chance that at the end of the year, when you file your taxes, you may have to owe the government more money because you took the money ahead of time. Makes sense?
I see. Yeah.
Mm-hmm.
So
But
when it's
go ahead.
so when it's time to do my taxes, how would I inform the IRS that I did the freelance gig?
They will, in this case, because the employer is giving you gave you the W-4 form, you're supposed to submit that back, right? The company must give you the W-2 form. The W-2 form is what you submit to the IRS.
Okay, I see. Thank you.
Because the W-2 form is going to list out that you worked X amount of days. This is how much you earned for the whole entire year. This is how much taxes that you paid. And when you compare to your IRS, right, those numbers must match. Okay?
Okay.
So now, for any reasons that, let's say, with the W-2 form, right? For the W-4 form, let's say you claim no withholdings because you want to get taxed at the maximum bracket, right? If you do that, you have a higher chance to get a tax refund, a tax return. You get money back. Because why? You're the one that was paying into the government for all this time. And because you didn't claim any of that money, you have a higher chance of getting that money back. But if you did claim that money ahead of time, then you might have a possibility that you have to pay the government back, to pay the government more. So that's the dangers of claiming W-4 forms. Now, W-4 forms, the reason why you claim is if that job isn't paying you enough and you need that extra money for any reasons, then that's why you claim it. Okay? But if you can hold it off until the end of the year and get extra money back, then that's also another benefit that could go that way as well. But for a W-4 form, that's just a recommendation. Now, again, I don't know everybody's individual financial situation, but if that's the way that you want to do it, you can always claim. But you just have to know that if you do claim, you have a possibility of having to owe the government more money. Okay? So, of course, once the W-4 form is submitted, then again, the company is responsible to give you a W-2 form that has all your tax information for you. So you submit that to the IRS. Okay. All right. Okay. And if you do not submit a W-4 form to your employer, they have every right to go ahead and proceed as if you submitted that you had zero withholdings and tax you at the highest bracket. So that's why it's very important that you submit your W-4 form. You can submit your W-4 form. Usually they tell you to do it right before they start paying you, okay? But you can submit a new W-4 form any given time that you have a financial change in your life. Okay, so let's say this year you don't have any children, so you claim zero withholdings, and then now 2 years later you have a child and you want to claim that child, then you can submit your W-4 form to the employer at any given time within those 2 years and say, I want to claim my child. All right, it's not like you submit one and done. Okay, you can, for any reason that you have any financial changes in your life, that's where you can submit a new W-4 form at any given time. Okay. All right. Any questions? So let's talk about payment periods. Okay. So here you could get paid on the daily. You could get paid every week, every bi-weekly, every semi-monthly, monthly, quarterly, semi-monthly, or annually. Okay. You wouldn't necessarily see a semi-annually or a quarterly payment Those are just a little outstretched there. But you do typically see annual payments. Now, annual payments, this doesn't really necessarily mean you're going to get paid at the end of the year after working 365 days, right? You get paid at the end of the year. No. This is more so like a rough estimate of what you should get for working for a whole entire year. Okay? Monthly payments usually, you usually see that with government programs or government agencies when they pay out their money, or things like the veterans, they get paid by the month. Okay? Semi-monthly and bi-weekly are more the common ones that you actually normally see in a regular workspace. So you could either get paid twice a week, which is bi-weekly. So every 2 weeks you get a paycheck. That means in grand total you get 26 paychecks. Or you can get it semi-monthly, meaning you get paid twice a month, meaning you get paid on the 15th and then you get paid on the 30th of every single month. So you only get 24 paychecks with a semi-monthly. So again, these two are usually the more common ones that you normally would see, because nowadays a lot of people are getting paid either every 2 weeks or twice a month. Other ones too is you can get paid on the weekly. So I know there's some places that, for example, any places that you work as a independent contractor, you could be paid at the end of the week. Okay? And then, of course, daily, so things like Uber, right? I know that you can cash out your earnings at the end of every night, at the end of your shift. So you can get paid every day if you'd wanted to. Okay? So those are common payment periods. Now, why are these so important? These are so important because when you actually get to take a look at the tax tables, which we'll talk about in a few, this is important, because this is where you're going to be determining which table to use, okay, based on the pay frequency. Okay. So now that we've gone through all of that, we've gone through filing for the employment, and we went over how often you're going to pay them. Now let's talk about how you pay them. So there's many ways that you can earn money, right? You can earn money by determining whether you are earning money by the hour, or you could be determined by knowing how much money you should get at the end of the year. So, and then divide by however many paychecks you're supposed to get. So in this case, so if you're a salary-based earnings, then it's usually a flat rate or a flat check. So you get the same check over and over and over again. But a hourly rate, right, that's going to vary by the number of hours that you contribute. Okay, so those are typical things that you would normally see in there. Now, the salaries, wages, or in this case, anybody that's an hourly wage is going to be based off the state's minimum wage. Now, in this case, I thought I updated this, but in this case, it's no longer $8.25 now. I believe I think it's close to $10 right now. It might be $10.50 right now. So, yes, so that's according to 2019. Okay, because when the pandemic happened, they increased the minimum wage, but it's based on what the state says. That's the max. That's the minimum that you can pay an employee. You cannot pay them less than that, except there are some exceptions to those rules. Now, the exceptions to that minimum wage could be anybody who's a tipped wage or tipped worker, okay, or anybody that's in a professional type of industry, or again, any recipients of opportunity wages. So again, anybody who's trying to if anybody is taking advantage of a government program that's saying, hey, if I work here, right, and they're also receiving benefits, that's going to be considered something that's opportunity wages. Now, why are tipped workers going to be exceptional to this federal minimum wage? Is because tipped workers, right, they can count their tips as part of their earnings. Okay, now here in Vegas, right, you'll normally see a lot of people here are based on tipped wages, right? So that means they can earn $8.25, and that means every dollar that they earn for tips, right, it's going to count towards the income that they earn. So that means, again, the company doesn't have to pay for them, but other people pay into their wages. So that's why tipped workers are going to be one of those exceptions to the minimum wage rule, okay? Because they're earning extra money on top of doing their job, right? They're based on their tips and earnings, okay? Other ways that you can earn extra income as well as double time, overtime, bonuses, and commissions, okay? And of course, for salaries, especially for salaries, if you're going to be paid a certain amount at the end of the year, right? Then anything extra will sometimes, depending on what the situation is, if your company allows it, sometimes overtime doesn't make a difference for salaries, because again, if you're going to get paid the same amount whether you invested 36 hours or 40 hours, it wouldn't make a difference. However, if you have exceptions to the rules, so again, if you agree to a contract, they might agree saying, well, if you go beyond the 40 hours, that's considered extra time, overtime, so I'll pay you for those extra hours. Okay? Now, those are depending on your company, but yes, you can be paid for overtime, you can work extra hours, but just know that if you are a salary-based earning individual, just depending on your company, you may or may not get paid for extra hours that you work, okay? But there are other ways that you can earn money is, through bonuses and commissions, okay? So that's how we earn money from a company, right? You get paid for what you do, okay? So then next thing is going to be talking about what offers and deductions that could either go for or against your paycheck. So this is going to be talking about what benefits can the company afford to pay for employees, right? So again, if for any reason, right, there could be fringe benefits, right? What are fringe benefits? So for example, let's say a Photoshop or a photography agency, right? They're really popular for taking pictures at events. A fringe benefit is that they could get discounted prices to go to an event to take pictures, okay? So that's going to be considered a fringe benefit. Now, they can also be offered discounted tickets even if you're not working that event. So people can go to the event and not take pictures, right? And that's going to be considered a fringe benefit. So for another example, right? If you work for a really good company, so any corporation, right, that they can get benefits for, discounts for, their phone bill, right? Or they can get discounts to theme parks, amusement parks, or even AAA, right? They could be a AAA member and get a discounted price on that. Those are all going to be considered fringe benefits because you're working for the company and the company can provide you extra discounts from other companies because in this case, that company might be using those other companies and they want to, expand and, branch out those minor companies to help them out as well. So this is called a fringe benefit. Okay? You can even get paid for holiday pay. So again, here in Vegas, there's no such thing as holiday pay, but on other companies and other places out there, a holiday pay. So if you're usually you can get those times off, but if it's necessary that you could get paid for holiday pay, you could get vacation pay, sick pay, benefit retirement plans. So an IRA, which companies don't really do IRAs; those are usually provided by individuals. But a 401k plan, okay? Yes, a 401k plan. Whether it's a deduction to your check because you're contributing to it, the company will match you. So again, any retirement plan is going to be considered a benefit. And of course, if you also have insurances such as health, dental, and vision or life insurance, those are all going to be deductions to your paycheck. But those are things that the company can provide you. Okay. Now then, how do you keep track of it? So again, any kind of means that you want to keep track of your employees, whether you have a clock in tower or a punch-in clock. So if someone is responsible to be given a punch card and they must punch in their timestamps in there, and then they submit their card at the end of the pay period, that's a great way to do that. Okay, that way you get an accurate amount of the person working there, and so on and so forth. You also have, other ways where you can, have somebody have an activity log, a spreadsheet, somebody. So again, for QuickBooks, there is a spreadsheet that you can punch in your hours for. Okay, so those are just ways that you can keep track of an employee for their time that they work. Okay. So let's actually talk about employee taxes, okay? What is the employee responsible for when they work for a company like yours? Well, in this case, right, the bare minimum that a employee is responsible for in the state of Nevada, okay, is just federal taxes, okay? And those federal taxes include federal income tax withholdings, okay? So again, what is federal income tax withholdings? Well, as I've mentioned before, it's a means of the responsibility to pay into the federal government as a part of contributing to society, okay? If you pay your taxes, right, then the federal can distribute those tax dollars to be able to provide anything in your community. They can provide government programs for your community, etc., etc. Okay? Now, federal income tax withholdings. What is it based off of? Now, in this case, right, we're going to be talking, I'll be introducing you to a what's called the circular E table, which again, every single year you're going to get a new tax table. Okay, so for the 2022, I will pull it up in a second. You were going to have a bunch of tax tables that you can look over to be able to calculate how much tax you're responsible to pay for. So again, the more money you earn, the higher percentage of taxes rates are going to be at. So again, and the more items that you claim on your W-4 form, then of course less taxes you have to pay. But still, that's one of the dangers of filing one of those, is because you don't want to pay less tax because you could be taxed again at the end of the year. You want to try to make sure that you pay enough tax. Now, as again, in the state of Nevada, we're only responsible to just only pay into, employees are only responsible to pay into their, just the federal taxes. There's no state taxes in the state of Nevada. Okay? So that means, if that's the case, what kind of methods am I going to use to be able to calculate my federal income taxes? there are two methods, the percentage method and then the bracket method. So both of them are going to use the circular E table, okay, which is your tax tables. Except one of them is you're going to be calculating based on a percentage. One of them, you just basically search the number and then you'll find how much you have to withhold. So in this case, I'm not going to show you the bracket method because that's just way too easy. So let's going to show you the percentage method, which is commonly more used because the bracket method is a rounded number. Percentage method is an accurate number because it's based on a percentage. So that means you get a little, the money from the taxes is a little more than, it's a little more accurate than it is for the bracket method. So we're going to be using the circular E table to find the tax tables, right? Which is going to be based on the amount that the employee earns. It's going to be based on the payroll period, the filing status, okay, and so on and so forth, okay? And what we're doing here is when we're calculating this, we are calculating for a manual payroll system. So let's talk about what the circular E table does. So here's the circular E. Now, this is just what it looks like here. But if you actually go to irs.gov, all right, I've also uploaded it here on the Google Classroom, right? You're just going to get, it's a bunch of tax tables, right, for you to be able to calculate your payroll taxes. Now here, federal income tax withholdings methods for the tax tables of 2022. So this is the most recent one. I've already uploaded it on there. Now, if you actually look at the topics and the different sections here, there are so many different ways that you can calculate your taxes, okay? So that's why it's very important that you don't go through this because I will provide the tables for you because some of them can be confusing. So the very first table that you will see here on here is going to be the tax tables for payroll for automated payroll systems, meaning things like QuickBooks is going to be an automated payroll system. Okay? At any application, any means that you have to use an automated payroll system, that's the first table that you're going to use. In this case, we're not using an automated payroll system. We're looking at a manual payroll system, okay? So if I keep scrolling, right, the next table you're going to see here is going to be the bracket method for manual payroll. So there's the first thing that we got to look here. But look, check this out. For W-4 forms for 2020 and later. Okay? So what you're going to see here is there's tax tables for 2000 for W-4 forms 2019 and prior, and then you have W-4 forms for 2020 and later. So again, here it's a lot more complicated. You have to make sure that you know which one you're using. But here's the bracket method, right? It's based on the payment period that you're working on. It's based on how much you earn and based on how much money that you've withheld. So in this case, you're just going to be scrolling through the pages and looking up what that number is. And this is a rounded number, but like I mentioned before, this is not what we're going to be using. Okay? So if I skip on forward, let's see. So that's the bracket method. The one that we want to get to is the percentage method. So here you go. Percentage method tables for manual payroll systems for W-4 forms for 2020 or later. So this is the one that we're going to be using. Now, as you can see, this also walks you through how to calculate your federal income tax withholdings. Okay? Now, if you read this chart, it's way more confusing than actually going through the PowerPoint. The PowerPoint, I'll break it down for you. Okay? So that's what you have to do. But once again, these tax tables are based on how your pay frequency is, what your marital status is. So in this case, This table right here is for people who are married filing jointly. Or this table here is for single or married filing separately. So again, and then it's based on how much they earned. Okay? So that's the huge difference. And then there's side one, which is looking at if you have a secondary job then or have a spouse and filing together. If you have that extra income, you need to be on this table, side of the table. But if you said no to that and you only have one job, then you need to stay on this side of the table. Okay? Very confusing, but I'm going to show you how to do this, okay? So this tax table, right, it's on the Google Classroom, but for any reasons that you want to are interested in knowing more, go to visit irs.gov/publication15. Okay? So let's go ahead and go back to this. So here, I have this table here for a weekly payroll period for someone who's married filing jointly, okay, and so on and so forth, right? This is just an example, okay? And this is how the tax bracket works, right? You're going to look at how much an individual earns, and if they earn more than, you would go through this line here saying if they earn more than, but if they earn less than, then whatever row that they earn more but less than, if this is it, then you're going to go through here. This is how much money that the government's going to take from you automatically. This is how much tax you're going to get for any dollar extra over what you've earned. And this is the amount of money that the government lets you keep. Okay? So let's go ahead and do an example. Okay? So this is the steps on what you have to do to be able to successfully be able to calculate the federal income tax withholdings. Okay? Let's start with the first step here. Step 1, determine how much this individual has earned. Okay? So in this case, this example here is L. L is a single woman with one dependent, okay? And she only has one primary job and earns $15.25 an hour. And this week, she worked a total of 45 hours, okay? And of course, she claimed her dependents, okay? And she took no additional deductions, okay, or any extra withholdings. So in this case, step 1 is to determine how much overall money did she earn from her job. Okay? So we're gonna take a look at the $15.25 per hour. Okay? And we're gonna multiply it by the 45 hours because that's how much she worked in one work period. Okay? We also have to keep in mind that the payroll period is weekly and yes, okay? So here, let's go ahead and determine this. How much did she earn? So this is your gross wages before taxes. So $15.25 times 45 gives you a total of $686.25. Okay? Step 2 is going to determine, did she have any extra jobs or any extra deductions? Okay? So step 2 says if she had extra money, if she had a second job, then she would have to calculate the extra income that she's earning for that pay period. In this case, we said that she only has one primary job. So therefore, step 2 is going to be 0 because she doesn't have extra income. Step 3 says, okay, what other deductions can she have? Okay, in this case, she claimed no extra deductions. So in this case, step 3 is a 0 as well. So that means the total amount of taxable income is going to be a grand total of $686.25. Okay? And this is the total amount of taxable income. Okay? So then let's talk about step 3. Step 3. So then step 3 is going to be determining how much income tax withholdings we need to take off of her amounts here. Okay, so in this case, right? We already know this amount. She's earned a total of $686.25. Her W-4 says that she filed as a single status, okay, and her pay period is weekly, and of course, because she only has one job, the checkbox in step 2 on the W-4 is no. Okay, so let's go ahead and determine it through the circular E table. Okay, here's a circular E table. Here we have the exact table that we're looking for, right? A weekly payroll period. She's filed as single, okay? And her checkbox in number 2 is 0. So in this case, let's go ahead and go through this. How do we read this chart? We got to read. How much did she earn? Did she earn over this amount, which is column A? Column B is how much money she earn less than, did not earn over. So in this case, she earned a total of $686, okay? That's definitely more than $433, but that's definitely less than $1,021. Okay? So in this case, this is the one I'm looking through, okay? Now, how do we read the rest of the table? C, D, and E. So in this case, we need to work backwards. E is going to be the total amount that the government lets you keep without taxes. So in this case, she can claim up to $433 to herself. Okay? Any dollar over that is going to be subject to a 12% tax. Okay? And then this $19.20 is going to be whatever the government's going to take away from you automatically. Okay? So let's review that again. She gets to claim $433 to herself. Any dollar over that gets taxed 12%, and then $19.20 is what the government's going to take from you no matter how much money you've earned. So, in this case, this is what we got to do. We got to take the total amount of that she earned. We're going to subtract the amount that the government lets us keep. So, we get to keep $433. So, that means in excess, she earned $253.25. Okay? We're going to tax that by 12% because that's the bracket, or that's the percentage that she is going to be taxed at, the 12%. Okay? That 12% is going to be giving you a total of $30.39, right? That's from the extra money that she's earned. Plus, we have to remember that the government's going to take away from you $19.20 regardless of how much money you've earned. So in this case, we're going to add these two numbers together to get a total federal income tax withholdings of $49.59. Okay? So once we figure that number out, the next thing is step 4. Step 4 is, did she claim any dependents? Now back then, the W-4 form for 2019, you actually write off your dependents first before you get taxed. Okay? In this case, this one happens after you get taxed. Okay? Very weird. So in this case, she decided to claim her child. Okay? And the pay period is weekly. So this is what we got to do. We got to check out what her W-4 form says. Her W-4 form says she claimed one child. So that means it's $2,000. Okay? And because it's $2,000, we also have to determine how many pay periods she's going to be having. Because this $2,000 is for the whole year. I know, shocking. A child does not cost you $2,000 a year. But that's what the government depicts it as, okay? They let you claim that $2,000 for that child. Now, in this case, we need to break it up based on how many payments we're going to be actually receiving. Since we are weekly, that means we're going to be receiving 52 paychecks overall. So what you're going to do,
Excuse me. So now, if we have one, we will be put it just 2,000. If we have two,
it's 2,000 per child.
okay, we need to put another. Like now, in the first column, we gonna be put in 4,000.
If you claim two, but this person's only claiming one.
Okay, I no. My question: if we have two kids,
It's
gonna be in the
it's
first column.
$2,000 per child. So if you have two children, then yes, you multiply it by 2,000 to get 4,000. Okay. So in this case, she's claiming one child for $2,000. So in this case, she must also calculate how much is it per paycheck. So therefore, she's getting 52 paychecks for the whole year. So we're going to take that $2,000, divide it by the 52, and that gives me a total of $38.46. That's how much you're going to claim for that child for that paycheck per year. Per month, per paycheck. Okay? So that means this is a deduction to the check. So if I claim that one child, that's $38.46. Okay? So that's going to deduct from the taxes that you're being withheld. So that means I'm going to subtract that out from the amount of federal taxes I'm being withheld for, and I'm going to get a total of $11.13 that this individual has to pay into taxes. They took extra money from their taxes because they claimed their child. So in this case, they only need to pay in $11.13 because that's how much they want to take off. Okay. All right. So that's your federal, and then of course, any other, and that's the last thing right there. Okay. So in this case, that says how much federal income tax withholdings you have in the results of calculating $11.13. Then lastly, step 5 is if you have on your W form, are you claiming any other extra withholdings or anything or other extra deductions? So this right here, there's no extra withholdings. So in this case, that's 0. So the total amount of federal income tax withholdings is $11.13. Okay. Any questions there for calculating federal income tax? No?
I don't have.
Okay. All right. So last concept here is going to be employee FICA. So once they pay into their federal income tax withholdings, they are also responsible to pay a portion of their money to their Social Security and their Medicare. So this is what the Federal Insurance Contribution Act is, okay? It's a protection plan for the future, right? It's a payment benefit plan for retirement, okay, for yourself as an individual that the government is going to provide. So Social Security and Medicare, okay? Now in this case, it is a percentage of your gross wages. So gross wages. For Social Security, it's also known as OASDI, which is Old Age and Survivors and Disability Insurance. Okay? But, it's more commonly known as Social Security. Okay? Your Medicare is going to be your HI, which is your hospital insurance, which in this case, right, is straightforward if you just know it as Medicare. Now, your Social Security is based off of a percentage of your gross wages, which is going to be up to 6.2%. This number has been this percentage has always been there since we've been doing payroll, okay? I don't know when the last time it's changed, but it's definitely still the same. It's still 6.2%. And Medicare is still 1.45% of your gross wages. Now, Social Security has a cap maximum. Right now, as of 2022, its maximum cap is $147,000. Okay? That's how much you can put into your own Social Security. Only up to a maximum of $147,000. Now, with the federal income tax, that doesn't mean you can just go ahead and say, I want to save extra money to my federal income tax. No. They cannot do that for you. Okay? You can only put up to $147,000 by how much money you earn. Okay, so that means it takes 6.2%. You cannot say, I want it to take 10%. No, you cannot do that. That's not how it works. It's just standard at 6.2%. And the idea of this is you're supposed to be working for until you're 65, right? I think it's changed now. I think it's 67 now. But yes, so the assumption is the time that you're working from when you're 30 all the way to 67, that whole entire time, you should be able to rack up a total of $147,000. That's what that cap limit is that this is how much money you should be contributing between the 30 years that you work. Okay? Whereas Medicare, right? Nope, there's no cap limit. You can keep if you go beyond. However, if you go beyond your Social Security limit, you could still keep on working and still paying into your Medicare. There's no cap limit for this one. So for the example, right, we had L earning $15.25 per hour and worked 45 hours. So in this case, she earned a total of $686.25. So we're going to take 6.2% of that, which is going to give us a total of $42.55. Okay? Same thing here over here for your Medicare, except you calculated 1.45%, which in this case, right, $686.25 times that 1.45% is going to be $9.95. Okay? So this is the Federal Insurance Contribution Act. This is your Social Security and Medicare. And these are the two percentages. Yes, I would recommend you to memorize this. Obviously, you have the PowerPoint and the study guide for the study review sheets for a reason. However, these numbers are going to be standard for whenever you go into the future for payroll. Okay? So this is how we calculate how much a person is going to be having to be receiving from a paycheck, right? So in this case, we have what's called a salaries and wages expense because like we mentioned before, right? It's part of the cost of doing business. We need to pay our employees. So therefore, it's an expense to us. Okay? But every federal payment, right? Every payroll tax, right? They're all going to be liabilities because what happens after you calculate this? You don't pay the government right away. You usually have a time limit, which we'll talk about that in a few minutes here. We usually have a time frame of when you need to pay the government for having employees. Now, it depends on how big or small your company is and so on and so forth. We'll talk about that in a few seconds. So, federal income tax withholding is a liability, okay? Because you're collecting this money from the employee to put into to pay the federal agency, right? They're not paying you. They're paying you to pay the federal government. Okay? Because this is your responsibility, and it's the employee's responsibility to pay into their taxes. So what they're telling you is hey, if since I'm working for you, the least you could do for me is pay my taxes for me and just give me my check with all the deductions taken out. Okay? So that's exactly what this is here. We got $11.13 for federal income tax. Okay? We got Social Security, which once again is a federal tax, right? The employee is asking you they're paying out of their paycheck to pay you to pay the government. So in this case, you owe the government money. So then you owe them another $42.55 because that's how much 6.2% of her gross earnings was. And then of course you also have a total of the Medicare of $9.95, right? The salaries and wages expense, once again, is going to be based on how much Elle has earned, right? What was her gross wages, right? Her gross wages minus all of the deductions of the federal income tax plus the FICA, right? If you take that away from the paycheck, how much is going to be left? In this case, she's going to walk away with $622.62. Okay? And that is how you do payroll. Right? Any questions here? This is the bare minimum. For the state of Nevada, there is no state taxes. But if you go anywhere else, so let's say you do state of California, you have to pay into disability and you have to pay into a lot of other things. So from the employee's paycheck, right? If you had any benefits deductions, 401ks, those will also deduct money from the paycheck as well. And if you have medical insurance where the company pays for either 50% or some percent of it, you also have to take that out of your paycheck. Any fringe benefits, if you are if you're in a union, right? That's also a deduction. You have to pay union fees. That takes away from your paycheck, okay? But for tax purposes only, the bare minimum is your federal taxes, and that's all I want you guys to know now, because it really depends on what the nature of your business is and what you offer. Now, second of all, this is only one employee. Imagine having to do this for 20 employees. Imagine doing this for 1,000 employees. You must do this exact thing for every single employee, and every single employee is going to have a different W-4 form. Okay? So imagine that. Manual payroll system is going to be one of the most labor-intensive jobs because, again, this is why they pay a lot of the big boys to just go ahead and just do it for them, right? They pay other people or specific payroll services companies to just do the payroll calculations for them. Okay. So, any questions?
No.
Okay. Let's go ahead and stop here because like I said, we're only going to learn employee taxes for today. Tomorrow we'll pick up and learn the rest, okay? All right? If there are no extra questions,